Welcome to another exciting edition of our podcast. This time, we're shifting gears, literally. After diving deep into the world of agrochemicals, we're now cruising into the fast lane of the automotive industry, with a special spotlight on South Korea. From electrification to exports and policy shifts to high-tech innovations, there's a lot to uncover. So buckle up, as our hosts Mike and Samanth take the wheel and drive us through the road ahead. Let's tune in.
Welcome to the deep dive. Today, we're putting South Korea's automotive industry under the microscopes.
That's right.
Looking at the road ahead, really, from now until 2030.
Yep.
We've got this detailed report from marketresearchreports.com. That's kind of our roadmap here.
It's pretty comprehensive.
It really is. It charts the key trends, the challenges, the opportunities in this, powerhouse of global car manufacturing.
Mm-hmm.
So think of this as your shortcut, maybe, to understanding the big shifts happening in the auto world, all pulled from this expert analysis.
And what's fascinating right off the bat is just the sheer breadth of info they pulled together at marketresearchreports.com. We're going to unpack, everything from projected production numbers, market share battles,
right,
to the really fundamental changes in what's powering these cars, the rise of electric and other alternative fuels.
And plus, we'll get into exports, domestic sales, the government's role.
Always a big factor there.
New tech, and the potential bumps in the road, too.
Yeah. Exactly. Potential pitfalls.
So get ready for some hopefully seriously insightful nuggets, all straight from this marketresearchreports.com/deep dive. Okay, let's unpack this.
Let's do it.
The report kicks off with a snapshot of production. In 2024, South Korea produced 4.13 million vehicles.
Still a massive number.
A huge number, yeah. But it's actually a slight dip from 2023. What's the story there, according to the report?
Well, the report points to a pretty significant headwind. Weak demand inside South Korea itself.
Oh, okay.
Yeah, high inflation, rising interest rates. It just, dampened people's enthusiasm for buying new cars domestically.
Really?
And this dip, it wasn't just minor. It kind of signals a potential longer-term issue for their domestic market, maybe forcing more reliance on exports.
Exports, which could be volatile, right?
Exactly. And it highlights the need to maybe adapt products for more price-sensitive local buyers.
Yeah.
It also meant globally their rank slipped.
Oh?
Yeah, they dropped to 7th largest auto producer in 2024. Mexico actually moved ahead of them.
Wow, okay. That puts it in perspective.
Yep.
But South Korea's always been a massive exporter, hasn't it?
Oh, absolutely. That's their strength. In 2024, something like 67% of those 4.13 million cars.
So over two-thirds.
Yeah, 2.78 million units were shipped overseas. The rest, about a third, sold domestically. Really underscores their global focus.
And looking ahead to 2030, what's the report suggesting?
MarketResearchReports.com suggests overall production will probably stay in that mid-4 million unit range. A gradual recovery is expected.
Right.
They're even projecting maybe 4.15 million units for 2025, so a slight uptick.
So relatively stable overall numbers then. But the big conversation everywhere is EVs, right?
Right.
How does that factor into this analysis?
Okay, yeah, here's where it gets really interesting according to the report. The South Korean government, they are making a huge push towards what they call next-generation vehicles.
Right.
Their target is to see annual production climb to around 4.5, maybe 4.7 million units by 2030.
Okay, so growth there.
Yes, and the main driver for that growth, electrified vehicles. MarketResearchReports.com highlights a really, really ambitious goal, producing 3.3 million electric vehicles domestically.
3.3 million. By 2030.
By 2030, it's a monumental shift away from traditional combustion engines.
That is huge. So that strong export focus we mentioned, does the report see that continuing with ease?
Yeah, the historical trend, exporting 60-70%, that's expected to continue. It might even nudge higher, given the constraints we talked about domestically.
Makes sense.
However, there's a crucial point in the report, too. Korean automakers are increasingly localizing production overseas.
Building factories elsewhere.
Exactly. Especially new EV plants like in the U.S., and that strategic move. It could potentially slow down the growth of exports coming directly from South Korea.
Right. That fits with things like the U.S. Inflation Reduction Act incentives, doesn't it?
Precisely. It's a way to adapt to those kinds of policies.
So if we sum up the production outlook from this MarketResearchReports.com report.
Okay, so we're looking at South Korea. basically maintaining a strong annual output, somewhere in that 4 to 5 million vehicle range through 2030,
Yeah.
but with a really significant and growing chunk of those being electric.
Okay, production's one piece. What about who's actually selling these cars? Market share? What does marketresearchreports.com say about that?
Right. The domestic market is really dominated by one major player, the Hyundai Motor Group.
Which includes Hyundai, Genesis, and Kia.
Exactly. Hyundai brand itself, their luxury division Genesis, and Kia.
And the numbers.
Yeah.
What did the report find for 2024?
Okay, so in 2024, Hyundai Motor, including Genesis, sold about 705,000 vehicles in South Korea. That's roughly a 52% market share.
Wow, over half the market.
Yeah, and Kia wasn't far behind. 540,000 vehicles, capturing about 39.6%. So together,
That's over 90%.
it's close, yeah. It's a near duopoly, and what's striking is it seems to be getting stronger, solidifying.
Which I guess raises questions about competition, maybe.
Well, yeah, the report kind of implies that. Such high concentration while showing their strength could maybe slow down radical innovation compared to markets with more players. Less pressure, perhaps.
So everyone else is just fighting for scraps, according to marketresearchreports.com.
Pretty much. GM Korea, selling Chevrolets, their sales plunged 36% in 2024, ended up with only about 1.5% share.
Ouch.
And KG Mobility, that used to be SsangYong, they also saw a big drop, 26%, landing them around 2.9% share while they were restructuring.
Any bright spots among the smaller domestics?
There was one the report highlighted. Renault Korea Motors, they actually saw a 61% jump in sales in 2024.
Really?
Yeah, gave them a low single-digit share. But the surge was mostly down to their new Renault Grand Koleos SUV, which interestingly is exported as the Renault Samsung XM3.
Ah, so a successful new model can still make a difference.
It seems so. Shows it's possible.
Okay, so domestically, it's mostly Hyundai and Kia, a few smaller players. What about foreign brands? Are imports making inroads, according to the report?
Oh, yeah. They're becoming a much bigger force. In 2024, imported vehicles hit a record high.
Record high.
Yep. Accounted for about 16 to 17% of all domestic sales. That's roughly 268,000 cars.
And who's leading that charge?
Well, premium European brands have been strong for a while. But the real story in 2024, detailed in the report, was Tesla.
Ah, Tesla.
Their sales just absolutely skyrocketed, up almost 550%.
550%.
Incredible, right? It meant they actually outsold GM Korea in volume, probably 25,000 to 30,000 units sold.
Why the huge jump?
Mostly aggressive price cuts and the Model Y just being really popular. Volkswagen also saw huge triple-digit growth, by the way.
That's a major shift then. So Hyundai and Kia must be feeling the heat on their home turf.
The report does note that both Hyundai and Kia saw their own domestic sales decline in 2024, which suggests, yeah, they did lose some share to these imports, particularly, it seems, in the EV segment.
Right, where Tesla made its big splash.
Exactly. Though it's worth remembering, Genesis, Hyundai's luxury brand, has a really solid domestic presence too, which helps Hyundai's overall position.
So looking forward, what's the forecast for this market share battle from marketresearchreports.com?
Well, the expectation is Hyundai and Kia will likely keep their lead. New models, strong brand loyalty helps.
Right.
The smaller domestic players probably keep focusing on niches to survive.
And the imports.
The big trend to watch is continued growth from imports, especially in EVs. And that increasing competition, it's likely going to push Hyundai and Kia to really step up their innovation game, protect that home market.
Innovation. Definitely the key word.
Yeah.
Especially with how these cars are powered. Let's dive into that fuel type segmentation. EVs, hybrids, ICE. What's the data from marketresearchreports.com show?
Absolutely. So while all the buzz is electric, it's important to remember, internal combustion engine vehicles, they still held the lion's share of new car sales in South Korea in 2024.
Still the majority.
Yeah.
But EVs are gaining ground, surely. What were the actual numbers in the report?
Okay, in 2024, battery electric vehicles, pure EVs, made up about 6.1% of new vehicles sold.
Okay, 6.1%.
Which translates to roughly 99,000 units. Interestingly, that was actually down slightly, about 4% from the year before.
Down? Why?
Well, considering the whole market dropped, the EV segment actually showed, relative resilience. It didn't fall as much as the overall market.
Oh, okay. And who's selling the most EVs?
Tesla was number one,
Right.
followed by Hyundai's Ioniq 5 and 6 and Kia's EV6.
Right.
But what's notable, the report mentions, is that some new domestic EV launches didn't have a massive immediate impact, which suggests the market might be in a bit of an adoption chasm right now.
An adoption chasm. Explain that a bit. What does that mean here?
It kind of implies that the early adopters, the real enthusiasts who wanted EVs early, they've mostly bought them already.
Okay.
But the broader mass market, the next wave of buyers, they might still be hesitant, waiting for, better options, better charging, lower prices maybe.
That makes sense. So if pure EVs are in this chasm, what about hybrids? They seem really popular globally. What does marketresearchreports.com say about them in Korea?
You're absolutely right. Hybrid electric vehicles, HEVs, they are definitely the rising stars in South Korea right now.
Big growth.
Huge growth. Sales surged almost 26% in 2024, reached about 384,000 units.
Wow. So what percentage of the market is that?
That means hybrids now make up around 23 to 24% of all vehicles sold.
A quarter of the market, nearly.
Yeah. And popular models like the Hyundai Grandeur Hybrid, Kia Sorento, Sportage hybrids, they're really hitting a sweet spot with consumers, a fuel-efficient middle ground.
What about plug-in hybrids, PHEVs? Are they significant, according to the report?
Not really, no. Plug-in hybrid sales were actually quite small in 2024, only around 9,100 units.
So less than 1%.
Way less than 1%, and that number was actually down about 14% from the previous year.
Why so low?
It probably reflects maybe a limited number of models available, and also the government subsidies perhaps leaning more towards full EVs or those conventional hybrids.
Okay. And the other alternative, hydrogen fuel cells. South Korea's invested a lot there, right? What's the update from the report?
They have, yeah. Hydrogen fuel cell electric vehicles, FCEVs. They occupy this sort of niche but symbolically important segment.
Yeah.
Hyundai is a key player globally with the Nexo SUV and their X-Giant truck.
Right.
But in South Korea itself, uptake in 2024, still pretty modest, well below EV and hybrid numbers.
Even with subsidies?
Yeah, even with government subsidies. It's mainly down to the still limited hydrogen refueling infrastructure, and the vehicles themselves are still very expensive.
Are they building more stations?
The government has plans, yeah, to significantly increase the number of hydrogen stations. But for now, FCEVs are well under 1% of new sales, mostly going to government fleets, taxi programs, that kind of thing.
So despite all this new tech talk, traditional gasoline and diesel cars still dominate for now.
That's correct, yeah. Conventional ICE vehicles still made up roughly 70% of new car sales in 2024.
70%.
Now, of course, many of these are more efficient, meeting strict emissions standards like Euro 6, but yeah, still the majority.
Any shift within ICE?
Yeah.
Like less diesel?
Definitely. There's been a noticeable decline in diesel passenger car sales. Diesel is now mostly found in SUVs and commercial vehicles. Gasoline is still common in smaller cars, sedans, but even those are increasingly offered with hybrid options.
But the long-term arrow is definitely pointing towards more electric, isn't it? What does the marketresearchreports.com analysis suggest there?
Oh, absolutely. The government has set some really aggressive goals. They're aiming for 4.2 million EVs on the road by 2030.
4.2 million EVs.
Yeah, and stricter CO2 emission standards for all new cars are coming too.
And the automakers are responding.
Massively. Huge investments in new EV models, battery tech. Hyundai, for instance, plans dozens of new EVs by 2030. They expect electrified vehicles, so EVs and hybrids together, to make up half or more of their domestic sales by then. And government subsidies are being tweaked too, favoring longer range, higher performance EVs. And there are new incentives trying to get younger buyers into EVs.
That government push seems pretty forceful. Any risks there?
Well, the report kind of touches on that. This level of government intervention always carries a risk of maybe creating market distortions.
Right.
The big test will be when those subsidies eventually phase out more significantly. Will consumer demand hold up? Can Korean automakers compete purely on price without that support? That's the question.
Okay, so let's look at the crystal ball. What's the 2030 fuel mix forecast from marketresearchreports.com?
Right. The forecast suggests battery EVs could potentially hit 30 to 40% of new car sales by 2030.
30 to 40%.
Yeah, but that assumes, charging infrastructure gets much better and prices come down or become more competitive.
And hybrid.
Hybrids are also expected to hold a strong share, maybe around 30%.
So combined, maybe 60, 70% electrified.
Potentially, yeah. Which means traditional ACE vehicles would fall below 30%.
And hydrogen.
Hydrogen FCEVs likely stay in the low single digits, maybe 1-2%, unless there's some major breakthrough in infrastructure or cost.
So the key is getting past that EV adoption chasm you mentioned.
Exactly. Bridging that gap to the mass market is critical for hitting those EV numbers.
Fascinating stuff. Okay, let's pivot now to where these cars are actually going. We've touched on exports, but let's dig into that balance. Domestic sales versus export trends using the marketresearchreports.com data.
Right. As we said, South Korea's auto industry is heavily, heavily geared towards exports, and that seems to have become even more pronounced lately.
Export volumes are bigger than domestic sales.
Consistently, yeah.
What were the specific numbers for 2024 in the report?
Okay, 2024. Korean automakers exported about 2.78 million vehicles. That was actually up slightly, 0.6% year over year.
Okay. And domestic?
Domestic new vehicle sales, and this includes imports, were around 1.63 million. That was down about 6%.
So exports up slightly, domestic down significantly.
Exactly. And in terms of value, vehicle exports hit $70.8 billion in 2024.
70.8 billion.
Yeah, just a fraction below the record set in 2023. And that strong value was driven by selling more expensive models like SUVs and hybrids.
Makes sense. And where are all these exported cars heading, according to the report?
Top destinations are North America and Europe. In 2024, North America took the lion's share. Exports there were worth $40 billion.
40 billion. Wow. Up or down?
Up, over 8%, reflects strong U.S. demand for Korean SUVs and increasingly their EVs, too.
And Europe.
Interestingly, exports to the EU actually fell quite a bit, over 25%, down to $8 billion.
Why the drop?
Possibly the sluggish European economy, maybe some localization of EV production starting within Europe itself.
What about other regions?
Shipments to other parts of Asia, like India, Southeast Asia, saw modest growth. And the Middle East, Latin America, they remain important markets too. But yeah, the U.S. is clearly the single biggest market.
Okay, so domestically, things have been a bit stagnant, it sounds like.
Yeah, domestic sales in Korea have been pretty flat or even declining in recent years, sort of hovering around that 1.6 to 1.8 million unit mark annually.
And 2024 was low.
Lowest since 2014, actually, that 1.63 million. The report attributes that to expiring tax cuts and those higher interest rates really dampening spending.
What's the outlook for domestic sales going forward?
The near term looks challenging: high household debt, an aging population,
Right.
structural factors.
Right.
Projections suggest maybe a slow recovery back to around 1.7, 1.8 million annual sales by 2030, but significant growth seems unlikely without big shifts.
That kind of highlights a potential issue, doesn't it? If domestic buyers are prioritizing value or delaying purchases.
It does. It's a trend. Korean automakers, traditionally so strong at home, will really need to address strategically. Maybe different models, different pricing.
But the export picture looks brighter, according to marketresearchreports.com.
Generally, yes. Korean automakers are actively targeting new markets, new segments to boost those overseas sales.
And the government's helping.
Yeah, supporting efforts through things like free trade agreements, helping local parts suppliers integrate into global supply chains.
What about the types of cars being exported?
Eco-friendly vehicles are a major focus. Hybrid car exports jumped almost 46% in value in 2024. And Hyundai and Kia have started exporting significant numbers of their EVs globally, too.
Okay, but we have to talk about the elephant in the room. The U.S. Inflation Reduction Act, the IRA. How's that impacting things, according to the report?
Yeah, that's a critical point.
Right.
The IRA, with its rules about needing North American assembly to get the U.S. EV tax credits, that puts Korean-made EV exports at a disadvantage in that huge U.S. market.
At least until their U.S. factories are fully up and running.
Exactly. Kia themselves even cited increasing uncertainty over U.S. policy as affecting their sales targets.
So how are they responding?
Well, Hyundai Motor Group is investing heavily in U.S. EV production. They've got that big plant in Georgia starting pilot production late 2024. But in the short term, yeah, Korean EV exports to the U.S. might face some headwinds without those tax credits.
So the key takeaway here is, exports remain the engine, but there's a strategic shift happening.
That's it, exactly. Domestic sales are mature, maybe flat. Exports drive the growth, but with an increasing focus on higher tech vehicles, hybrids, EVs.
And the volumes.
Annual export volumes are projected to stay around 2.8 to 3.0 million units, maybe potential for more growth in new markets. But navigating trade rules, producing competitive cars for different regions, that'll be key.
The role of government just seems so central to everything we're discussing. Let's really delve into the specific policies and regulations influencing the industry in South Korea, as outlined in the marketresearchreports.com report.
Oh, definitely. The South Korean government is a major player in shaping the direction here, especially driving that transition to cleaner vehicles. They've rolled out a whole range of policies, subsidies, regulations, all having a direct impact.
Okay, let's start with EVs. What kind of purchase help is available, according to the report?
So Korea offers subsidies, right, to bring down the sticker price of EVs. And these were updated between 2023 and 2025 to specifically encourage longer range and safer models.
Nice sell.
Well, for example, EVs with bigger batteries, more range, they get larger subsidies. There was also a neat little youth subsidy bonus introduced in 2024 for first-time EV buyers aged 19 to 34.
Trying to get younger people in. But are subsidies permanent?
No, the overall trend is actually a gradual dialing down of these subsidies. The idea is, as EV prices become more competitive naturally, the government support reduces. Automakers need to lower costs themselves.
How much are the subsidies now?
As of 2025, they're still significant, up to maybe $6 to $8 million per EV, depending on the model. That's roughly $4,500 to $6,000 USD. But yeah, expected to decrease further towards 2030.
What about tax breaks? Any incentives there mentioned in the report?
Yeah, they had that temporary 30% cut in the individual consumption tax on car purchases, trying to boost demand after the pandemic.
Right, you said that expired.
It did, end of 2023. Contributed to that sales dip in 24. Now there's talk about new tax incentives, maybe specifically for green cars.
And for EVs and FCEVs currently.
They get exemptions from certain registration taxes, reduce annual vehicle taxes. Plus, looking ahead, the government's 2025 support package includes tax breaks for making key tech locally, like battery cells, part of their national strategic technologies push.
Makes sense. Infrastructure is obviously huge for EVs. What's the government doing there, according to marketresearchreports.com?
They're actively investing, expanding the charging network. Plans announced in 2023 to add about 4,400 fast EV chargers nationwide.
And for hydrogen.
Also increasing hydrogen fueling stations from 56 up to a planned 119 by 2027. Plus, they extended highway toll discounts for eco-friendly vehicles through 2027.
A little perks add up.
Exactly. And local governments chip in to free parking sometimes for EV SFC EVs, maybe restricting older diesel vehicles in city centers.
What about the environmental rules themselves? How strict are emission standards?
South Korea generally aligns with Europe. So currently on Euro 6 levels and planning to adopt stricter standards similar to Euro 7 later this decade.
And fuel economy.
They have a CAFE regulation, corporate average fuel economy, pushing automakers to sell more efficient vehicles overall, increase the share of low and zero emission models. Plus, there's a CO2 fleet target aiming for a 40% cut in transport emissions by 2030 compared to 2018. Big goal.
That requires a lot of electrification. It sounds like the government's putting serious money behind this whole transition. Tell us about the industrial support and R&D funding in the report.
Oh, absolutely huge amounts. In January 2025, the Ministry of Trade, Industry, and Energy announced a massive plan. Euro 21 trillion.
21 trillion won. How much is that?
About 14.4 billion US dollars.
Right.
A huge investment plan to basically revitalize the domestic eco-friendly vehicle and battery industries.
What's the money for?
It's focused on stimulating demand, developing cutting-edge tech, strengthening the battery supply chain, managing risks.
Any specific allocations?
Yeah, nearly 8 trillion just for the battery industry. Over 5 trillion for commercializing level 4 autonomous driving and software-defined vehicles. And another 8 trillion to help the auto parts suppliers make the transition, develop core EV components.
That's a massive commitment.
It really is a very significant state-led push to transform the sector, building on earlier initiatives too.
And what about the hydrogen roadmap? Still part of the strategy, according to marketresearchreports.com.
Yes, definitely. South Korea sees hydrogen fuel cells as strategically important for the future. Their roadmap from 2019 set ambitious targets for hydrogen vehicles, fueling infrastructure.
Are those targets still active?
They might evolve, but the government continues to provide subsidies for hydrogen vehicles, for the fuel itself, tax incentives for companies investing in hydrogen production, fuel cell tech. It's clearly a dual-track approach. Push battery EVs hard, but also invest significantly in hydrogen's potential.
So the overall picture is just really strong government backing for electrification and new tech.
Precisely. It's this combination of incentives, infrastructure investment, R&D funding, and regulatory pressure. a comprehensive strategy aiming to make eco-friendly vehicles the standard.
And we might see more policies down the line.
Yeah, you can probably expect further developments, maybe even phase-out dates for gasoline car sales eventually. That close collaboration between government and industry in Korea, it's going to be a major factor shaping things through 2030.
All this really sets the stage for some exciting tech developments. Let's dive into those emerging technologies and the R&D efforts in South Korea's auto sector based on the marketresearchreports.com report.
Yeah, Korean automakers and suppliers are definitely not sitting still. There's heavy investment across a whole range of emerging tech to stay competitive.
Okay, let's start with the heart of the EV batteries. Where does the report position South Korea in battery tech?
Right at the top, really. Global leaders. Home to giants like LG Energy Solution, SK On, Samsung SDI.
And what are they working on?
Constantly pushing boundaries, developing next-gen batteries with higher energy density. That means longer driving ranges, which is key for consumers, right?
Absolutely.
Also faster charging, better safety, lots of R&D focus on solid-state batteries, too.
The potential game changer.
Could be, yeah.
Yeah.
For range and safety. Also looking at other advanced chemistries. And the government helps here, too, designating battery tech as that national strategic technology, brings tax credits, funding.
And securing materials.
Big focus there, too. Korean firms are investing heavily overseas to lock down supplies of crucial raw materials, lithium, nickel, cobalt.
So what's the expectation for batteries in Korean EVs by, say, the late 2020s?
The hope is we'll see Korean EVs featuring these more advanced, maybe in-house developed batteries, potentially even limited production of solid-state batteries if things go to plan.
Okay, what about self-driving cars? Autonomous driving? How close is South Korea, according to the report?
There's a lot of activity. Hyundai Motor Group has its own dedicated division, plus investments in companies like Motional.
What level are they at now?
Rolling out level 2+ systems, widely, advanced driver assist, and testing level 3 features hands-off in certain conditions.
What's the government goal?
Ambitious. Commercialize level 4 autonomous vehicles by the end of this decade, backed by substantial funding.
Level 4 meaning fully autonomous in specific areas.
Exactly. So you can anticipate pilot programs, maybe robo-taxis, autonomous shuttles, in certain cities by 2030. Companies like 42dot, which Hyundai acquired, are key here, developing the software, the mobility services.
And the infrastructure helps.
Korea's advanced 5G, upcoming 6G networks, that's a huge advantage for V2X communication. Vehicle to everything, lets cars talk to traffic lights, other cars, crucial for making AVs safer, more efficient.
So maybe not full level 5 everywhere, but early level 4 adoption.
That seems to be the goal, positioning Korea as an early leader in commercial level 4 applications.
The car becoming more like a computer on wheels. What about software-defined vehicles, connectivity? What's marketresearchreports.com saying?
That's exactly the trend. Korean automakers are fully embracing this idea. Cars as software platforms. Focus on over-the-air OTA updates, connected car services, developing their own operating systems.
Like Hyundai's plan.
Yeah, Hyundai announced plans for an advanced connected car OS in all its new vehicles by the late 2020s. Allows continuous updates, upgrades via software.
And government funding helps here too.
Definitely. That big investment plan includes money for SDV, software-defined vehicles. It'll accelerate integrating features like remote diagnostics, AI-powered assistance, better infotainment. By 2030, expect cars to be deeply woven into our digital lives, leveraging Korea's strength in consumer electronics.
We're also hearing about totally new forms of mobility. What's South Korea doing with things like flying cars? Urban air mobility.
Yeah, the definition of automotive is broadening. Hyundai has that urban air mobility division, Supernal, developing electric vertical takeoff and landing vehicles, eVTOLs.
Seriously.
Yeah.
Flying taxis.
That's the vision. Aiming for commercial sites by 2028. Leveraging their know-how in electrification, autonomous tech. It's part of a bigger vision to be a smart mobility solutions provider.
Beyond flying cars.
Both Hyundai and Kia have launched car-sharing, ride-hailing services in Korea, tapping into that mobility as a service trend. And investments in robotics, like Hyundai buying Boston Dynamics, that points towards a future where maybe different kinds of autonomous mobility converge.
Fascinating. And back to hydrogen, which Korea is still big on. What's the R&D focus there per the report?
Hyundai is still pushing hard on fuel cells, developing a next-gen system called Initium for the Nexo SUV, planned for late 2025. Promises better efficiency, lower costs.
Bigger vehicles.
Big investment in fuel cell tech for heavy-duty trucks, ongoing trials there. Korea's strategy is really to be a leader across the hydrogen value chain, potentially using it in commercial vehicles, buses, trains, even ships by 2030.
What's the key hurdle for hydrogen?
A major R&D focus is bringing down the production cost of green hydrogen made using renewable energy to make it truly viable economically.
Beyond the powertrains, any other innovation areas?
Oh, yeah. Design is always key for Korean brands. Also developing purpose-built vehicles, PBVs.
PBVs, like what?
Vehicles designed specifically for tasks like e-commerce delivery, ride-hailing, mobile offices. Kia has stated they want to be a leader in PBVs by 2030, using dedicated EV platforms.
Materials manufacturing.
Ongoing R&D into lightweight materials for better efficiency, advanced manufacturing techniques like 3D printing. It's all supported by rising R&D spending, collaboration with Korea's powerful electronics sector, and that crucial government funding.
So fast forward to 2030. What kind of car are we expecting from South Korea?
The expectation is significantly smarter, greener, more connected vehicles. We'll likely see multiple EV models with much longer ranges than today. Some level of hands-off autonomous driving on highways should be common, widespread connectivity features.
And if Hyundai and Kia hit their big EV targets,
If they hit those ambitious global EV sales goals for 2030, it'll really show how central technology and innovation have become to South Korea's entire automotive strategy.
sounds like a very promising future. But it can't all be smooth sailing. What are some of the key challenges the industry needs to navigate to get there, according to marketresearchreports.com?
Yeah, despite all the momentum and investment, the report definitely highlights a number of significant challenges and risks facing the industry heading towards 2030.
Let's start with supply chains. We all remember the chip shortages. Is that still a concern, according to the report?
It is. The global semiconductor shortage hit Korean production hard. And while supplies have improved, vulnerabilities definitely remain.
How so?
Well, the industry relies on these incredibly complex global supply chains for all sorts of components. That makes it susceptible to disruptions, geopolitical tensions, pandemics, natural disasters, you name it.
Are they trying to localize more?
Yeah, efforts are underway to localize, diversify key supply chains, maybe stockpile critical items. But yeah, component shortages remain a potential constraint.
What about competition? The global auto market is brutal.
Fiercely competitive, yeah. Korean brands face pressure from their traditional rivals, Japanese, American, European makers, but also this wave of new entrants, especially from China.
Chinese EVs.
Exactly. They're advancing incredibly rapidly, offering attractive, often lower-priced models. That could seriously challenge Korean competitiveness, particularly in emerging markets, maybe.
And China's role in batteries.
That's a strategic concern, too. China's dominance in large parts of the battery supply chain, that's something Korea is actively trying to mitigate.
Domestically, what are the hurdles inside Korea?
Well, the domestic market itself is pretty much saturated. Plus, you've got an aging population, a shrinking population overall, and potentially younger people may be less inclined to buy cars than previous generations.
So potentially flat or declining domestic demand.
That's the risk, which increases that reliance on exports we talked about.
Labor issues have sometimes been a factor in Korea.
Yeah.
Still a concern.
South Korea does have relative
Uncertainties out there.
Definitely. External regulations are a big one. Think potential European carbon tariffs or even stricter emission rules elsewhere. Those could complicate exports.
And trade tensions.
The general risk of rising global trade protectionism is always there. Automakers need to be really agile, adapt quickly to shifting policies. Failing to meet new regulations could mean penalties, lost market access.
This massive tech shift requires huge investment. Is that a risk itself?
Oh, absolutely. The sheer amount of money needed for the transition to EVs, autonomous tech.
Right.
It puts a huge financial strain on automakers.
What if the tech doesn't pan out? Or adoption is slow?
That's the risk, right? New technologies might not mature as quickly as hoped. Consumer uptake of EVs might be slower than projected, leading to lower returns on those massive investments. Plus, new challenges emerge, like cybersecurity in connected cars, software reliability.
And finally, what about the environmental and energy side of this huge shift?
Yeah, as the industry electrifies massively, South Korea needs a really robust and ideally cleaner energy strategy just to support all that EV charging.
Where does their electricity come from now?
Still a significant portion from fossil fuels. So developing renewable energy capacity is really important to make the EV transition truly green. Plus, you have the challenges of battery recycling, sustainably sourcing all those raw materials for the batteries. Big issues.
Okay, so lots of challenges. But the report still seems somewhat optimistic, based on the industry's past resilience.
That's right. The Korean auto industry has a proven track record of adapting, overcoming challenges. And that strong collaboration between the government, the manufacturers, the tech sector, that provides a really solid foundation.
But the competition is tougher now.
Exactly. The global competition, especially in EVs, is just so intense now. It means the margin for error is probably shrinking. They need to execute really well.
So looking ahead then, pulling it all together, what's the overall outlook? What kind of projections are we seeing for South Korea's auto industry through 2030 based on this marketresearchreports.com analysis?
Okay, the consensus view among analysts, as presented in the report, is for a return to, let's say, moderate growth in the second half of the 2020s.
As things stabilize.
Yeah, as supply chain issues hopefully continue to ease, new technologies gain more traction, total vehicle output is projected to grow modestly, maybe reaching around 4.5 million units annually by 2030. That's a kind of base case scenario.
And the growth will be different.
The emphasis will be much more on quality-driven growth, increasing value, more tech sophistication, particularly in the cars they export.
And those ambitious government EV targets, how do they fit the forecast?
Well, the government's aiming super high. 4.2 million EVs on Korean roads, 3.3 million EVs produced domestically each year by 2030.
Which would be?
If they hit those targets, it could mean, 70 to 80% of Korea's auto production in 2030 would be electrified in some way.
But achieving that depends on?
Heavily depends on consumer adoption really taking off, both domestically and globally, and on Korean EVs being truly competitive worldwide.
What about the domestic market itself? What's the expectation there by 2030?
Expectations for a recovery from that 2024 low point. Annual domestic sales could get back to around 1.7 million units, maybe by 2026, 2027, driven by new EV and hybrid models.
What kind of cars will Koreans be buying?
The preference for SUVs, eco-friendly cars, is expected to continue, and imports. They could potentially gain over 20% market share by 2030.
But Hyundai and Kia still dominant.
Yeah, likely to maintain their dominant positions. We might see some niche domestic startups too, maybe in specialized EVs or autonomous tech.
And for exports, the industry's growth engine.
North America stays key, but maybe served more by local U.S. production from Hyundai Kia. Expect aggressive expansion into Southeast Asia, India, maybe parts of Africa.
So new regions becoming more important.
Yeah, Southeast Asia could become a top export region by 2030. Strong EV demand in Europe is also a growth opportunity. The export mix will definitely keep shifting towards electrified vehicles, and maybe even potential for exporting autonomous tech mobility services down the line.
What kind of changes might we see in the structure of the industry itself in Korea?
We might see maybe further consolidation around Hyundai Motor Group. Smaller players could face marginalization or maybe seek partnerships.
What about Renault or KG Mobility?
Renault Korea could introduce more global EV models from the alliance. KG Mobility is expected to pivot more fully towards EVs. The future for GM Korea still seems somewhat uncertain.
And the suppliers?
Big transformation there. A major shift towards companies specializing in electronics, motors, battery components, supported by those government initiatives trying to keep a strong domestic supply chain.
So bottom line, the auto industry remains crucial for South Korea's economy.
No, absolutely. Vital contributor to exports, manufacturing GDP, could potentially exceed that $70.8 billion in vehicle exports seen in 2024.
What about jobs?
Might see shifts, right?
Yeah,
Maybe fewer traditional manufacturing jobs, but growth in software, engineering, new mobility services. Government regional plans also often center on the auto sector.
Okay, so wrapping it all up, what's the big picture takeaway for South Korea's automotive future based on this deep dive into the marketresearchreports.com report?
By 2030, the industry is expected to look quite different. A really significant transformation, a strong pivot towards electrification, automation, and continued globalization.
Production levels.
Annual production likely in that 4 to 5 million unit range, but the majority of those being electrified vehicles. Hyundai, Kia, Genesis will be driving that change, striving to keep Korea competitive globally.
Challenges remain, but the outlook is.
Challenges are definitely there, as we discussed. But the industry's proven resilience, its adaptability, that strong government-industry link, it positions South Korea potentially to thrive in this new era of mobility.
Some really, really insightful takeaways there on the future of South Korea's car industry. All thanks to that comprehensive analysis from marketresearchreports.com. We've seen that huge shift towards EVs, the continued dominance of Hyundai and Kia, the vital role of exports, and that really strong government influence.
And what's particularly interesting, I think, digging into this marketresearchreports.com report is to consider the wider implications. What did these trends mean for the entire global auto landscape?
Right.
South Korea's experience, that strong government backing, the rapid tech advancements, could offer really valuable insights for other countries trying to navigate this profound transformation in the auto world.
Absolutely. A potential model, or at least a case study. And if you, listening, wish to delve even deeper into this topic, explore the full details of the report we've been discussing.
Which is very detailed.
It is. You can find a link in the description, or just visit marketresearchreports.com directly. They have one of the most extensive premium report databases out there on the automotive industry. Covers everything: automotive aftermarket, EVs, all the current technologies shaping the future of mobility. Definitely worth checking out if you need that deeper level of data.
We hope you enjoyed the podcast and found it valuable for enhancing your knowledge and understanding. Don't forget to browse our website, marketresearchreports.com, where you'll find tens of thousands of research reports spanning various industries. These insights are designed to empower decision makers and help you stay ahead of the competition.